Study material, page number 2.77, problem number 8. Given below is the statement of profit and loss of ABC Limited and relevant balance sheet information. Statement of profit and loss of ABC Limited for the year ended 31st December 2013. Particulars rupees in lakhs. Revenue, sales 4150, interest and dividend 100, stock adjustment 20. Total expenditure, purchases, wages and salaries, other expenses, interest and depreciation. Total of P, profit before tax, tax provision and profit after tax. Please settle down quickly. Balance of profit and loss account brought forward 50. Next, profit available for distribution 560. Appropriations, transfer to general reserve 200, proposed dividend 300 and distribution tax 30. Total D 530. Balance C minus D 30. So you are given appropriation account also. Okay. Trade receivables opening closing is given. Inventories opening and closing is given. Trade payables opening and closing is given. Outstanding wages opening and closing is given. Outstanding expenses opening and closing is given. Advance tax opening and closing. Tax provision opening and closing. Tax provision is nothing but assessed tax liability. Compute cash flow from operating activities using both direct and indirect method. So you have to do it both using direct method and indirect method. Write down cash flow from operations, direct method. Cash flow from operations, direct method. Cash flow from operations, direct method. I think you know how to calculate cash flow from operations, direct method. We showed directly cash sales, collection from debtors, collection from any other business operation, then payment to creditors, payment for wages and salaries, payment of expenses, payment of tax. Very simple. Particulars, calculation, rupees, 3-column table. Particulars, calculation, rupees, 3-column table. Now, we'll start with, if you see the P&L account, you are not given breakup of sales into cash sales and credit sales. We'll assume everything is credit sales, not cash, credit. We'll write collection from debtors. Collection from debtors. Now, if you observe the problem, you have credit sales given, you have opening trade debtors and you have closing trade debtors. You can leave 6-7 lines for completing the cash flows. Then you can write working note number 1. Collection from debtors. I'll write a simple statement, you tell me whether you agree with me or not. Opening debtors, add credit sales minus closing debtors is equal to cash collection from debtors. Do you all agree with this? Just substitute the numbers then. If you agree, substitute the numbers. If you don't agree, we'll fight. Opening debtors given to you very clearly, 250 lakhs. 250 lakhs. Credit sales. See the P&L account. You know the total sales 4150 lakhs. I'm assuming the entire sales is credit sales 4150 minus closing debtors is 400. So please tell me how much you get collection from debtors? 4,000 lakhs. So please take it in your cash flow from operations statement which we are preparing. The first item, collection from debtors, 4,000. All the figures are in lakhs. Clear version? Next. Do you have any other income in the profit and loss account? Yes. Interest and dividend. If you see interest and dividend income 100 is shown. Can I show it as a cash flow from operations? Please tell me. Can I show it as cash flow from operations? This interest and dividends cash is coming not because of my business. It is because of my investment in shares, debentures or bonds of other companies. So it is not because of investing activity, it is not because of operating activity. It is because of investment activity. Hence we cannot take it as part of cash flow from operation. Okay. Next, stock adjustment is not a cash flow. Next, expenditure, purchases. You are given purchases during the year. How much the purchase during the year? 2,400. I think you know, no? Schedule 3. We are showing purchases and then difference in stock. You remember expenses in schedule 3 P&L account. First item purchases. Then you show changes in stock. Purchases and changes in stock is nothing but cost of goods sold. Instead of showing directly cost of goods sold, you show purchases and then changes in stock. If you show purchases and changes in stock, automatically you are booking cost of goods sold into the profit and loss account. Is it clear? So purchase is given directly to us 2,400. Can I say payment to creditors is also 2,400? Please tell me, can I say the entire 2,400 was paid to the creditors? And what is debited to P&L account? Not cash payment, based on accrual. So this is the total purchases during the year. Total purchases, total payments may not be equal because creditors will be ready to give us some time. See the other information given to you. You are given trade payables. Trade payables. 230 opening figure and 250 closing figure. So you know opening creditors, you know closing creditors, you know purchases for the year. Can you find out payment to creditors? Yes. So how will you calculate payment to creditors? One more working note. Payment to creditors. Opening creditors or within brackets in this problem we are saying trade payables. Add credit purchases less closing creditors. Tell me the numbers. Opening creditors was how much? 230 purchases, 2,400 closing creditors, 250. Payment to creditors, 23. This you will show as a payment in your cash flow from operations. I'll prepare it here. Cash flow from operations. Collection from debtors 4,000. Cash payment to creditors 2380. Outflow. Next, if you see the next item, you have wages and salaries. Wages and salaries debited to profit and loss account are based on accrual concept. But we are not going to show wages and salaries based on accrual concept in the cash flow statement. We have to show the cash payment. Yes. So along with wages and salaries, we are given some outstanding information also. Just turn the page and see. Outstanding wages, opening 40, closing 50. Here you have to be careful. You have to be careful. I think single entry I have taught you, non-profit organizations have taught you how to arrive at cash payment when expense is given. How to arrive at expense when cash payment is given. Can you tell me how we do arrive at it? I'll give you 2 minutes time. Think about it and tell me. I want cash payment when expense is given. When cash payment is given, you know how to arrive at expense. When payment is given, amount paid during the year, add closing outstanding minus opening outstanding will give you what? Amount of expense to be recognized in the profit and loss account. Here, amount recognized as expense in P&L account is given, and you are given opening and closing outstanding. How do you arrive at cash payment? You have to prepare the statement in the reverse order. Okay. How to arrive at expense? How to arrive at expense? Payment, add outstanding at end, less outstanding at beginning. This is what we have learned to arrive at expense to be debited to P&L account. I know this. Now I have to arrive at this. I will go into reverse direction. Expense plus outstanding at beginning minus outstanding at the end. I will get the payment amount. Amount paid plus outstanding at end minus outstanding at beginning. You will get the expense to be recognized in P&L account. When I know expense to be recognized in P&L account, I want to arrive at this. How will I arrive? Go in reverse direction. This plus this minus this will be this. So wages and salaries paid. Wages expense. Please tell me what is wages expense? Debited to P&L account. Add opening outstanding. Opening outstanding 40 less closing outstanding 50. Payment 790. Wages and salaries paid. Outflow. See the P&L account, next item, other expenses. Other expenses, you are given interest and depreciation separately. So what is other expenses here? Administration, selling and distribution expenses, which are nothing but part of cash flow from operations. Are you able to understand? Next, other expenses, debited to P&L account is 60 and you are having outstanding expenses, opening outstanding and closing outstanding. Similar statement you have to prepare. Here itself I prepare. Expenses paid, underline, expense debited to P&L account. Please tell me how much expense is debited to P&L account? 200. Expense debited to P&L account 200. Add opening outstanding less. Do you have any prepaid? Closing outstanding. Tell me opening outstanding, how much was it? 10. Closing outstanding? 20. 190. Expense paid. Expenses paid 190. See the next item in the P&L account, interest 60. Expense. Please tell me, is interest expense an operating cash flow? No. Interest expense arises because of financing activity, the activity of borrowing money from others for your business purpose. That activity is not your regular business operation. Your regular business operation is buying goods, selling goods. taking services, providing services. So in these activities, whatever cash flows occur, operation. Borrowing money, repaying money along with interest, borrowing money from equity shareholders, repaying money to equity shareholders, all these is part of financing activities. Come in. Come in. So interest paid will not be shown in the operations activity, it will be shown as part of financing activity. Next, depreciation. Depreciation. Very good. Then you are given tax provision. Can I show tax provision as a payment here? Tax provision, it has only been provided for. You have just set aside your profits for payment of tax. You have actually not paid. What have you paid? Turn the page. Advance tax. Last year you paid advance tax of 180. That would have been adjusted against last year's liability. Current year again you have paid advance tax of 195, which is your payment of tax. Payment of advance tax 195. That's it. Do you have any other cash flow relating to operations? No. Please tell me the net cash flows from operations. Net cash flows from operations 445. Leave it open. Leave it open. Leave it open. How much was it open when you came? Please keep it open like that only. Very good. This is cash flow from operations, direct method. Now indirect method. Write down. Cash flow from operations, indirect method. This kind of a problem should come in the exam. If I am an examiner, I will give this question. Why? Because it tests the student in both the concepts, direct and indirect. Remaining investment activity, finance, and whether you test or not, it doesn't matter because it is always going to be same. Father ke liye dal de. Write down. Cash flow from operations, indirect method. Cash flow from operations, indirect method. Now बादल भाई बताएंगे कहाँ से शुरू करना. टिप्पू बादल. Can I rub this now? Now write down cash flow from operations, indirect method. You are remaining silent when I am asking you something. I will also remain silent for 10 minutes. Then you understand what the problem is. Cash flow from operations, indirect method. Particulars, rupees and rupees. Fantastic, Badal. Net profit before tax. How much amount? Whatever you will say, right? How much?
710 lakhs.
Okay, very good. 710. After that, add non-cash, non-operating expenses. Leave some space. Very good. Then less non-cash, non-operating income. After that, leave some space. Then no cash flows before working capital. Okay, we'll say cash flows before working capital changes. Now here I will show particulars, rupees, cash flows before working capital changes. Question mark. After this, what shall I show?
Working capital changes.
Okay, here I will show working capital changes. Working capital changes. Then need some space. Then what should I do here? I will get operating profits before, not operating profits, operating cash flows before tax. या तो बता रहा नहीं है मेरे को. बता रहा नहीं है. Operating profits before tax. उसके बाद less taxes paid. What will I get now? Net cash flows from operation. Question. अभी उठा नहीं है संतोष. सो रहा है क्लास में. Okay, starting point has been fixed by Badal, so you cannot ignore it. So let us continue now. Now tell me, non-cash, non-operating expenses. Where will you search for these items? Profit and loss account. See the expenses side. Purchases is not a non-cash expense, it is a cash expense. Wages and salaries is a cash expense, other expense is a cash expense. Interest, is it cash or non-operating? It is cash expense but non-operating in nature, hence it has to be added. Interest expense. How much amount? No. Sir, why are we adding? One more simple example. Badal was doing a business. Okay. From his business he generated, we can say 10 lakh rupees of profit. Just by buying and selling goods, he generated 10 lakh profits. Okay. But Badal had borrowed money from a money lender. He paid 9 lakh rupees to him as interest. He was left with only 1 lakh. Now my question is, how much cash was generated from his business first of all? He is left with 1 lakh cash. My question is, how much was generated by his business? 10 lakh. After suffering interest payment, he was left with 1 lakh. Now, when I am calculating cash flow from operations, I don't want to know how much is left after making all financial charges payments or after making all investment payments. I want to know what was the cash generated by me from my business operation. So what should Badal say? Okay, 1 lakh is left after making financial payments. Add interest, I would have been left with 10 lakhs, the amount was generated from my business operation. Is it clear? That is what we are doing here. Next. After interest, depreciation. Debited to P&L account, no? Is it cash or non-cash? Non-cash. So we have to add. Depreciation. How much? 100. See, I don't want anyone to talk because others' concentration is also getting affected. Continuously make some sound, it will irritate me also. Next. Depreciation we have added. Okay. Now again same example. Badal generated 10 lakhs cash from his business. Okay. But when his accountant submitted him the P&L account, it showed only 5 lakhs as profits. Badal has 10 lakhs cash in his pocket which came from business profits. But when the accountant submitted the P&L account, he sees only 5 lakh profit. Now he is laughing at the accountant. Accountant, you are saying only 5 lakh profit, but there is 10 lakh cash in my pocket. Reconcile. Accountant will say, sir, I know you have 10 lakhs cash in your pocket. This 5 lakhs is after depreciation, which is not a cash expense. So 5 lakh profit, if I add depreciation, I know how much cash is there in your pocket. Okay, that is why we are adding depreciation. Next. Okay, profit before tax, tax provision. Tax provision. If we show tax provision as a payment, no. We want tax paid. I think you already know tax paid. Advance tax paid. How much was it? 195. So what is scheme of entries? Listen to me. At the beginning of the year, there was a liability of 180. There was an asset of 180. At the beginning of the year, there was advance tax paid 180. At the beginning of the year, you had an opening provision of 180. Set off. The asset and the liability are set off against each other. During the current year, at the end of current year, you have created a fresh provision for liability of this financial year, which is payable in the assessment year. Financial year, assessment year. So tax is payable in assessment year, you have created a provision. But department says no payment, we can say post-paid payment, you have to make prepaid payments, advance tax. So during financial year, we have discharged the liability by paying some advance tax. So this advance tax will be set off against provision next assessment year, that is the next year. Is it clear? So during the year, I have paid advance tax of how much? 195, which is shown as a payment there. You should say, sir, brackets. Forgot brackets. One bracket is going to be the, one bracket can change your life. Yes, sometimes. Very good. Next. Okay, after that we need not be concerned because below the P&L account, whatever adjustments are there, they will appear in investment activity or financing activities. That's it. We don't have anything else. But wait, income side. Interest and dividends. Interest and dividends. Income credited to P&L account. Is it a cash flow from operations? No. So we have to exclude it. Interest on investments. How much? Stock adjustment are we to do? No. Stock adjustment we are not going to do. Let us show the working capital changes now. Okay, we'll discuss about it later. Trade receivables. Let's show the working capital changes. Trade receivables 250 and 400. There is an increase in trade receivables. Increase in trade receivables is what? How much? Outflow. Next, inventories. Inventories. Opening 180, closing 200, increase in stock by 20. See the P&L account. Now your doubt will get clarified. Increase in stock is shown on income side. Decrease in stock it shows as expense side, as a consumption. Is it clear? So what is the difference in closing stock? So we have an increase in closing stock which is considered as an outflow. How much? Trade payables 230 and 250. Trade payables, it's a creditor. 230 increase. So we have to say inflow of cash. Increase in trade payables. How much? 20 inflow without brackets. Outstanding wages 40 and 50 increase. Increase in wages. How much? 10. Increase in wages outstanding. Inflow 10. Outstanding expenses. Last year 10, current year 20. It has increased. So again it is an inflow. So Sir, how is increase in outstanding expense inflow? पैसे दिए बिना जेब में रख लिए ना. Increase in outstanding expense means you are taking money but you are not giving it back. You are taking benefits but you are not giving it back. The benefit which you receive you are going to convert it into cash, but you don't give the money to the person who has to be paid the money. So you are left with that cash, no? So increase in outstanding expenses is again an inflow of cash. 10. That's it. Now calculate cash flow before working capital changes. Now let us address this doubt because that doubt will be there in the minds of many people. So what is that stock adjustment, sir? See, if you pull that stock adjustment to expenses, it is on income side, no? Put a hook, drag it down to expense. It will change sign. Why? If an item is just appear on income side, if you pull it down to expense side, it's going to change sign, no? Are you able to understand? How was that number arrived at? Closing stock minus opening stock. If you pull it down to expense side, it will be opening stock minus closing stock. Think. Closing stock minus opening stock. If closing stock is more than opening stock, the difference is income. Income side. Put a hook and pull it down to expense side. It will change sign. If you change the sign, it will become opening stock minus closing stock. Purchases. Add opening stock minus closing stock. What is that? Cost of goods sold. Are you able to understand? And cost of goods sold is the cash flow, operation cash flow, you know. So now calculate how much do you get?
770.
Before working capital changes?
Yes, sir.
770.
640.
Before tax?
640.
After tax?
445.
Open your practice manuals, no? With this we finish all the problems which are there in the study material.